What is an exchange traded fund, or popularly known as ETF? Wait, why don't we ask Shikhar Dhawan to give an introduction to this video?
मैं सोच रहा हूँ कौन सी कंपनी के शेयर्स लूँ।
ओह, शेयर्स की ड्रीम टीम बना रहा है।
अब ये कंपनी एनालिसिस है, तेरा क्रिकेट नहीं है।
मेरी सुन, तो सिर्फ ETF में इन्वेस्ट कर।
ETF?
ETF यानी एक्सचेंज ट्रेडेड फंड। ये एक तरह का लो कॉस्ट म्यूचुअल फंड स्कीम है। अपने कैटेगरी की सिलेक्टेड कंपनियों के शेयर्स में इन्वेस्ट करता है। हुई ना ड्रीम टीम?
हाँ यार।
और इसको तू स्टॉक एक्सचेंज में ट्रेड भी कर सकता है। और एक और बात बताऊं?
बता।
इसमें डेट ETF भी है। ये सिलेक्टेड कंपनीज के बॉन्ड्स में इन्वेस्ट करता है।
ये तो सच में ड्रीम टीम है यार।
सही है ना?
Thanks, Dhawan, for a great explanation. So essentially, ETF is a type of a security that tracks an index, a sector, a commodity, or any other asset class. But the difference is you can purchase and sell it on the exchange just like a share. ETFs can be designed to track the price of a commodity or a list of diversified set of securities. In fact, you can design ETFs that track an investing strategy like dividend yield or growth strategy. So in this video, I talk about how essentially an ETF works, what are the different types of ETF, and the advantages and limitations of ETF. Do watch till the end. As I said, ETFs can be bought anytime during the equity trading hours. Now you may think, how does the price of ETF change? It depends on the underlying. Let's say, example, you have an ETF that has got 3 stocks of equal weightage. 2 of them go up by 2% each and 1 of them goes down by 2%. Your ETF hence will go up by 2% because it adds up the positives and subtracts the negative. Simple. It's a cost of the underlying. These ETFs can be actively or passively managed. In an actively managed ETF, the ETF is operated by a fund manager. He needs to assess the market condition, he needs to understand the risk and then invest into a set of stocks or a set of different sectors. There are also passively managed ETFs which essentially would invest in index or stocks, and all they have to do is just go and buy the same set of stocks that are in the index or in the sector. What are the various types of ETFs in India? The first and the most popular being equity ETF. These essentially go and buy shares of listed firms. There are various types of equity ETFs. Index ETFs like Nifty 50, which goes and invests in Nifty 50 shares. And then there are sectoral ETFs like banking ETFs. And then there are thematic ETFs like investing in consumption as a theme. Then there is this commodity ETF. Here in India, the most popular one being gold ETF. They go and buy physical gold, but then you can hold gold in paper, thereby worrying less about asset protection. The third one being debt ETF. These essentially would invest in GSEC, government securities. And the fourth, the last one being currency ETFs, not very popular in India. There are 4 key advantages of investing in an ETF. First, and the major one being the cost. When you invest to a mutual fund which is actively managed, you have to employ a fund manager. That adds to your cost. You could save that when you invest in an ETF. The second one is diversification. When you invest into single or 2 companies, you're subjected to companies' risks. By buying an ETF which is diversified, you reduce that risk substantially. Third is flexibility. You don't have to wait for day end NAV. You can sell the ETF anytime during the business day, during the trading hours. You don't have to worry about the exit loads. Therefore, ETFs are a lot more flexible. And finally, in a passively managed ETF which goes and buys only index stocks or sector stocks, you are not subjected to fund manager's thought process. A fund manager can go wrong. You can pretty well assume that index will any which ways have the best companies of India. Why don't I just go and invest into a passively managed ETF itself? What are the limitations? Illiquidity. Trust me, this is what I have felt in myself. When you want to sell an ETF and assume that it's not a very liquid ETF, you may end up selling your ETF at a big discount. This is the biggest disadvantage of owning a different kind of an ETF. Second is you have to pay a lot of other costs too when you buy an ETF, because just like the way you buy a stock, when you have to pay a brokerage, you have to pay taxes. So the same will involve here too. And psychologically, when you see your ETF going up or going down, you may end up selling it early or very late, thereby stopping the wealth creation process. And the third big disadvantage is that in India, ETFs are still not very diversified. They are very focused on few sectors and indices. You're not going to get your portfolio exposed to various different diversification strategies that you can have when you invest into a mutual fund. In India, ETFs are slowly becoming popular. The largest ETF book is from ICICI Prudential AMC with over 3 lakh crores of assets. Ironically though, the top performing ETF is Motilal Oswal Nasdaq 100 ETF. Globally, it's a very large industry and I'm sure ETF will grow over a period of time. But I still suggest to speak to an investment manager before taking a call on ETFs or any other investments. Good luck.